Imagine being able to build an app with your name on it, just by thinking about it.
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Wright Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yes, $69.99 for all of this here. Good evening, everybody. Hopefully everybody having a good evening. Hopefully everybody had a good day. Today was FOMC Wednesday. Hopefully ain't nobody get wrecked this afternoon. Y'all know I really don't care about what they be saying inside the news releases for real. I just be want to know what time they are so I can wait for the carnage to be over. I'm a little bit tired. I've had a long few days. Today was another long day, so I'm tired. So won't be before you long today. We're gonna go ahead and get right into it, man. If this is your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty thank you for always tuning into Tim's Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., aka Aranya Gunday. That's just Big Spot if you don't hablo español. And you're tuned to another episode of the Intraday Price Action Recap. It's being brought to you by the Smart Money Manuscript. Smart Money Manuscript is your one-stop shop for all your things trading and investing. It's everything that I've ever talked about on my YouTube channel, condensed into 40 video and quizzes. 40 video and quizzes, not 40 videos and 40 quizzes, but there's a total of like 40 videos and quizzes to help you be well prepared for all of your trading and investing needs. First link in the description below, $69.99. We do have monthly Q&As. We had our first monthly Q&A on the 13th. The monthly Q&As fall on the second Saturday of every month at 11 a.m. Eastern Standard Time, just as a added bonus of mentorship to go along with the Smart Money Manuscript. Shout out to everybody that's been participating thus far. If Price did anything that caught you off guard today, there's a link pinned to the top of the chat in YouTube. That link will bring you over to the Zoom call. You don't have to give me an email to get on the Zoom call. You don't have to pay to get on the Zoom call. I'm not going to try to spam you if you get on the Zoom call trying to get you to buy anything from me. The link is there. There is a waiting room because when I didn't have the waiting room, people was pulling up doing all kind of pornographic stuff live on the screen, and I'm not trying to offend anybody, so I'm screening everybody that try to come into the Zoom call. All right, so if you would like to come on the Zoom call and ask any questions about price action, and you want to talk directly with me to get a clear understanding on something that you misunderstood today in price action, click on that link that's pinned to the top of the chat. Come on over here, hang out with me. Shout out Light Skin Deborah. We got Light Skin Deborah up in here today. We got Here to Learn and Share up in here. We got Rhonda Green up in here. I don't know if y'all noticed, but Rhonda Green pulled up with the hard-hitting notes in one of the videos. I don't know if Rhonda, only make the hard-hitting notes when it's a video that she feel like is some gems in there, or if she just, been slacking off and not doing the hard-hitting notes anymore. I don't know what it is, but hadn't seen the notes from Rhonda in a while, but in one of the more recent videos, she dropped some hard-hitting notes with the timestamps and everything like that. So shout out Rhonda. We got Kim up in here. Shout out Kim, has the top fan chat crown today. Shout out Kim. I don't know how she got it when she's like the third thing I see posted there, but shout out Kim. We got Honey pulling up in here today. I see more numbers than I see names, but them all the names that I see. So them are all the names I'm gonna say. I'm gonna go ahead and hit this Alt S, and I'm gonna share my screen, and we're gonna go ahead and get to the price action recap because I'm dog tired, boss. Just like coffee. I'm tired like John Coffee. Like the drink, but only spelled different. All right. Here we are. We didn't do a price action recap yesterday. So looking at Monday, Tuesday, and Wednesday. We did one for Monday, I think, but we didn't do one for Tuesday and Wednesday. All right, so Tuesday. All right, so Tuesday was the 16th. All right, that's today's new day opening gap. All right. Okay, so this is the new week opening gap here. On the old contract, there was no gap for the week, right? I just had a purple line sitting there that said new week open, right? But on this contract, there's a small gap for the new week opening gap there. And that would be it right there. Small bullish gap up, right? So that'll be it there, resting down here around this 1 hour busy that you see that I marked out right there. Right, that 1 hour busy that you see that I marked out right there. Would anybody like to take a guess as to why, with today's price action, I heard something like somebody was coming in, but I don't see nobody. it made a noise like somebody was coming in, but I don't see nobody. All right. Looking at today's price action, would anybody like to take a guess as of why I had that particular BISI right there marked out as a discount PD rate that I was watching to see what goes on with it? So this was yesterday's open here. This where price opened up yesterday, right? And we rallied up into all-time highs. Yes. Yes, it was, Kim. All right. All right. Yes, it was. It was the very first one in this displacement higher, taking out liquidity at this anticipatory reactionary point. So if that was the first one, right, as we're going up, right, that makes it the what coming down. Right. Right. If it's the first one going up, when you're coming back down, right, as price is trading back down here, not yet. That's once you come down here and close below it. All right. That's once you come down here and close below it. Mm, 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 mm. Light skinned Deborah, you can unmute. What is it?
Makes it a high probability BC to be used.
Nope. That's gonna be a high probability inversion fair value gap once we close below it. But if it's the first when we're going up, right? Now this right here. What is it now? When you're coming back down. So when you up here and you look down through these PD arrays, right? This is what? This is our what?
A discount.
Yes, in a discount, but what about it in the discount? No, not support.
If it breaks back below level, it can't hold above below. I'm sorry, back above it. If it breaks below, comes back to recess and goes down, then more than likely that's my stop loss. I usually have a monthly stop loss on the chart, but everybody's stop loss is going to be different. You guys will have like number wise, percentage wise,
last line of defense.
That's our last line of defense for the bullish narrative, because there's no more imbalances before you get to the external liquidity for this dealing range here, right? For this range here, right, this is just internal liquidity for the lowest, you know what I'm saying? Right. But for this portion there, that's your last line of defense. But you guys know when I be on live and y'all hear me say, ain't no more imbalances beyond this, ain't nothing left but lows or highs or liquidity. Ain't nothing left past this but liquidity, right? That's your last line of defense, right? Because that's the last PD array, right? That's the last PD array that's standing in between you and the liquidity, right? Like, for example, if there was no BISI here and that was the BISI there, this bullish order block would be your last line of defense, right? That will be your last line of defense right there, because that's the lowest bullish PD array in this price leg that's supposed to support price. So if you got a very deep retracement, we anticipated to come back to what? Right? Whenever we get in these deep retracements, we're anticipating it to come all the way back to what? Right? What are we expecting it to come back to? What's the two things that's all the way at the top or the bottom of the PD array matrix?
The swing highs, swing lows.
Nope.
Oh.
We don't want it to get to the swing low.
Oh. bullish order block, rejection block.
Yes. So when you're looking at a really deep retracement, right? The deepest you want to see it go is to the bullish order block, because that's the, you know what I'm saying? That's your last line of defense, if it will, before it reaches your liquidity, right? And if you got an imbalance resting inside of that bullish order block, then you're looking at that. See, in this case here, this bullish order block right there, that's your lowest imbalance coming all the way down. So what does price seek? Price seeks for inefficiencies and liquidity. So if it's coming down looking for inefficiencies and you're getting a very deep retracement, this is the lowest inefficiency that you got. So for this time frame, you're looking to see how does price close in relations to that lowest inefficiency right there, because that's, we getting that deep retracement. So we want to see how do we close in relation to that, right? And in this case, right, every time we came down here, you know, we got a closure that's respecting, right? That we even got a closure respecting the order block, because this is your order block here, right? All of the closures are respecting the order block. Yeah, when we got our news, right? When we got our news, it shot up above midnight here, and then it dropped down, right? All the way down to this new day opening gap, right? Offering sell side delivery coming through that busy we have marked out, coming through that daily bullish fair value gap, right? Trading all the way down almost to the low of the new day opening gap, right? And then rallying back up and closing near last week's high, but still respecting that bullish order block, still respecting that bullish fair value gap, right? Never actually got a closure down through these hourly PD arrays, right? Wicks do the damage, bodies tell the story, right? You hear Michael talk about a lot of times that FOMC will be a two-part move, right? The first move will be the false move, right? Which is we came down and took out this sell side. Then the second move starting, you know what I'm saying, at the press conference, we'll get the real move. And then as you see, we come back up, then we trade all the way back up, take out the buy side there, right? And it played out to the T today, right? So we come here, get a bearish Judas swing, shoot up above midnight, drop down, take out sell side. And then after that carnage is done, it comes back up, trades up, and takes out the buy side liquidity, right? During the going from 2:30 up to pretty much 4 o'clock, like during the 3 o'clock hour. We go to 15-minute candles, we can see that right there up until like 3:30, right? So this is our 2 o'clock candle, trade above midnight, drop down, right? And then our 2:15 candle, we drop down into the daily, right? We trade back up, get an immediate rebalance there, trading back up on this 2:15 candle into that 145 candle. Then we open up this 2:30 candle, right? Drop down. Okay. We dropping down. Once we come down and touch that new day opening gap, we trade back up, come up, take out the buy side, right? So we had the fake move down. Then we had the other move back up, taking out the buy side. So two-part move played out beautifully during the FOMC. Now, mind you, right, this immediate rebalance there, right, that immediate rebalance, and then we get the strong reaction coming off of it and coming all the way down here, then opening up and dropping down into that new day opening gap. That right there could very well have fooled you into thinking that price was going to keep sliding, right? Not going to sit here and pretend like that would not have fooled a lot of people, that price was going to keep sliding. Because when you think about it, right? When you think about it, price, when you get an immediate rebalance, right? Like this right here, what do you want to see? This candle, at the least the next candle, you want to see it getting out of there and going in that direction. It does that. But once we get to this daily, this new day opening gap, right? Price use that as support and we trade back up, right? and close respecting that hourly fair value gap we had watching at the close of an hourly candle, right? So when we open the 2 o'clock candle here, right, we trade down this first 15 minute and close below that hourly fair value gap we watching. So now price is looking super heavy. We come up here, touch that, then we go back and get an immediate rebalance, right? Now that we trade back in there, we want to say, okay, if this is a true immediate rebalance, I want to see price. Can't find the link. Is the link inside the Discord, right? Didn't I share the link in the Discord?
Yep.
Oh.
This joker here. Yep. And then so once we get that, we start selling off very heavy. Then we open this next candle and start selling down, continuing down. So this is looking like an immediate rebalance that want to keep dying off, right? And then once we see that, that could very well fool you into thinking we're going to go. But if you're under the anticipation of the FOMC, typically, not 100% of the time, but typically it plays out as a two-part move, right? So during the announcement, right, we get this bearish drop, right? And then when we going into the press conference, right, we've got the immediate rebalance, and then we start dropping down again. But if you're anticipating a two-stage move, when you hit this anticipatory reactionary point and you notice that the bodies are telling the story, right? And then here, right there on this 245 candle, as we rallying back up, we close back above that high right there. So the wicks are doing the damage, the bodies are telling the story, but on a lower time frame, if you understand that the FOMC is going to may take you the wrong way and then reverse the majority of the time, you could be in here, right, on lower time frames looking for entry possibilities. Now, mind you, on these 5-minute candles, it's not really giving you a lot to trade for a big risk to reward, like meaning coming from here up, right? Let's see what that is. Is that a decent trade from this fair value gap up to there? Oh yeah, that's a good trade. 88 points. Yeah, it's giving you plenty to trade inside there. 88 points ain't nothing to shake a stick at. That's a good trade, right? So you can see there is giving you a nice setup based off the fact that you're anticipating price to be a two-stage move, right? And so Tuesday, do you not count the initial move as the push up before the no? You're looking at that. You're looking at that. You know, that initial snap, that's not the move, right? When you get that initial snap and it just run liquidity, that's not the move. You're looking at where price is actually trading to, right? And once you see where it's actually trading to, then you start to look to see if it's going to redeliver in the opposite direction, right? Because when the news drops, this is the 2 o'clock candle there, right? When the news drops and we just take off up here above the midnight open like that right there, right? When we take off like that right above the midnight open and drop down, immediately you're looking at that as a bearish Judas swing. So the initial, right? So you're looking at this right here as the initial move as being a bearish move because you come out there and get a bearish Judas swing, right? And so once you get the bearish Judas swing, right, we come back up and the Judas swing gets fulfilled. We come back into the invert this little small inversion fair value gap right there. There's Civi right there. We talked about this earlier today. That's a unicorn. You got a bearish breaker, a fair value gap, trade back up into that unicorn, right? Then you trade down and you hit this anticipatory reactionary point, right? Once you hit that, right, you immediately get a change in the state delivery. As soon as we hit it there, boom, immediately get a change in the state of delivery. This down close candle right here that traded down below the low, right, immediately gets swallowed up. Have you ever been swallowed? Have you ever been swallowed? It immediately gets swallowed up. who know where I get that from?
TDJ.
Yes. I wonder if he looked back at that and be like, that was a bad idea. It made sense when I was thinking it. But now that I look back at it, that wasn't the best thing to say. But we got to change the state delivery there, right? So now, once you get a change in state delivery there, now, you know what I'm saying, you could be looking at some type of entry on a lower time frame if you're, you know what I'm saying, if you're in tune with the algorithm and you watch lower time frames like that. Or, right, once you come up here and get the change in the state delivery based off the overall move, the whack up, right, and create that bullish breaker right there, right? Now, you got an imbalance, you got a breaker, you got a bullish unicorn model right there. Trade back down into the unicorn. Then you go back up, take out those relative equal highs right there. We got some more. I don't know. All right. So you're looking at the first move, right? The first move is not just the snap. You know what I'm saying? What is the algorithm telling me off the, you know what I'm saying? This is when the rate announcement dropped there. And this right here is when the press conference started right there. Right. So when we get the rate announcement, what do we get? Boom, boom, a bearish Judas swing. So what is that? That's bearish. Right. So now that it's bearish, and then now we're going into the press conference. If the first move was bearish, now I'm anticipating some type of bullish move. I don't know the percentage of time, but you know, it's normally going to be like that. You know, have like a two-stage move where you got the false move, then the real move. Is it going to happen every time? No, it's not. So what do you want to look for to see? I got something in my eye and it's driving me crazy. You want to look for, has price traded into an anticipatory reactionary point? If it hit that anticipatory reactionary point, is it giving you a change in the state of delivery? Is it giving you a break in market structure? Is it giving you something to say, okay, I can lean into the fact that X amount of times the FOMC announcement and press conference is a two-stage delivery with the false move and the real move, right? Okay. Let's look at this morning's price action. Right. We'll look at this morning's price action. We kind of looked at this afternoon price action. We talked about it there with the FOMC, how we had the two-stage delivery and what it delivered off of. Now we'll go over here and look at this morning's price action. Right. Let's go over here, mark out our 7 a.m. All right. So if we come over here and mark out 7 a.m., if I can go the right direction. All right. That's 7 a.m. right there. All right. So looking at 7 a.m., then if let's go ahead and mark up our normal levels that we want to keep in mind, right? Pre-market buy side liquidity. That's going to be liquidity from between 7 and before 9:30, right? So right there, that'll be your buy side, and we want to look at our pre-market sell side, liquidity. All right. And then this is 705. That's lower than that. So that'll be your sell side right there. Let's go to 15-minute chart so I can just mark this like this. Current and below. Right. Now let's switch over to regular trading hours. Okay, so switching over to regular trading hours, we're going to look at, let's look at buy side liquidity for regular trading hours, right? And this is our 9:30 open. Okay, so for our 9:30 open, coming back to the left, first thing we get to is our afternoon buy side, right? So from 1:30 up until 4, that's the highest high right there. Okay, then we come over here and look at our sell side, regular trading hours, right? From the 9:30 open, coming back, first thing we get to is we got 1:30 here. So we're already below the 1:30 sell side there, but we'll mark it anyway, right? When we come to 9:30, we're opening up just below the afternoon sell side. So we'll mark it. And since we're just below the afternoon sell side, keep looking over here. We see that we got lunch, right? So the lunch sell side is the daily low, right? We got the daily low. Then we also got some other sell side over here, but we're just gonna look at the lunch sell side and that sell side there, right? So that's the sell side that we're paying attention to as the 9:30 opens up. Okay. Then okay. So now when 9:30 opens up here, we immediately trade up into the pre-market buy side, right? And then not only do we trade up into the pre-market buy side, what else do we trade up into on this 15-minute time frame? What can y'all see us trading up into once we hit this pre-market buy side? Remember, whenever you go into buy side or sell side, we always want to know how far can price go. What do y'all notice that we trade into right after trading up into that buy side?
Fair value gap.
What fair value gaps? Talk to me.
The Civic.
This should be right here.
Yeah, right there.
Yes, that should be right there. We got this 4 a.m. Sibby. That's from a London session. What else we got up there? What else we got up there?
We got inversion, high probability inversion fair value gap.
Yeah, that'll be true. That will be true because if you look right here, there's no fair value gap there. And that's the first imbalance that was created when we took out that buy side. That's very true. I was thinking it was just a balanced price range, but now that I look back there, that is what it is, right? So we got us a high probability inversion fair value gap and a SIBI right there, right? So now, and we traded up into that. And then once we traded up into that, we dropped it like it's hot, right? So when we dropped it like it's hot, we've gone from we let the market establish a range, right? We traded into the buy side. And then once we traded into the buy side, we came back down, traded into the sell side and traded there with like some authority. Drop down, cut, slap through all of this right here and closed well below that right there. Okay. Now, this very next candle there, right? We traded back up into that candle right there. So now at this time, right here, when this candle closes right here at this time, what are we anticipating and what premium arrays are you keeping in mind when price closes on this 9:45 candle. So when this 10 o'clock candle opens right here, what premium PD arrays are you keeping in mind, and what are you anticipating right now at that point?
An immediate rebalance.
Okay, very good. What are you anticipating to be an immediate rebalance?
What you mean?
I'm saying, which candle are you anticipating to be an immediate rebalance? Which candle are you anticipating to act as immediate rebalance? Talk to me like I don't know like I don't know what you're talking about. Which candle are you anticipating to
The
be?
third candle should drop lower. I think you said between the first two candles after that should drop
Yeah,
lower,
that ain't them
right?
the next candles. But what candle are you anticipating to act as immediate rebalance? From when this candle right here open up, what candle are you anticipating to act as immediate rebalance?
I'm trying to get what you're saying. That that
Which
candle once it goes up and it's not a fair value gap up top, and it touched the other candle and came back down. That's immediate rebalance, right?
I mean, I understand all that, but what candle? I say, talk to me like I don't know what you're talking about. Which candle is that? When this candle
Oh,
opens up right here, which candle
yeah,
are you anticipating to act as immediate rebalance?
The one you hovering over
yeah,
right
the
now.
one you hovering over, the red one.
No,
The 9:45.
the 9:45 count, the one right before it, this one. The one you anticipating, the one right, we're anticipating that one to act as immediate rebalance, right? And if you ain't understand that this is a 9:45, all you got to do is say the one right before it. So I say, when this candle opens, what candle you anticipating to act as immediate rebalance? And you said everything. You said it traded back up and it ain't got no fair value gap no more. So now the next candle, I ain't worried about the next candle. You're anticipating this one to act as an immediate rebalance. Okay, because this ain't the immediate rebalance. This is the immediate rebalance. This is the this is the consequence, or the, what's the word I'm looking for? This is the result of the immediate rebalance, right? When I say I want to see the next candle at the latest, the two over, this is the result I want to see because of the immediate rebalance. Okay. So we want to see this act as immediate rebalance. Now, what premium PD array are we watching? Are we keeping on our radar, since we're anticipating this 9:45 candle to act as immediate rebalance?
Um,
I want to hear somebody else talk besides Seawalk now. If you was on the tape reading stream this morning, you should be shouting it out loud. Even if you wasn't on the tape reading, right? Even if you wasn't on the tape reading, it should be jumping off the screen at you right now. What premium PD array are you watching at this point when this candle opens up? Wait a minute, what are you doing? When this candle right here opens up, what premium PD array are you watching, since you anticipating this to be an immediate rebalance?
Not sure if this is the answer you're looking for, but I wouldn't want it to go past 50% of that width.
Let's go, man. You're looking at this premium wick right here. This is what you're watching right there, right? And especially consequent encroachment of that wick right there, right? Because if price is exceedingly bearish at this point, because it gave you an immediate rebalance, you should see an immediate response. It should be a very strong bearish effect off of this immediate rebalance right here, right? So that's why I always say I want to see that next candle at the latest, the second one. In the higher the time frame, I really don't want to see it going past that next candle. I want to see it getting out of there, right? Because this is a very strong signature, right? So I don't want to see it I don't want to see it digging up into the 50% of that. And then when I put the quadrants on there, right? When I put the quadrants on there, because you're going to always remember the quadrants of any PD array that you're marking out, right? If it does dig in there, I want to see it hit the 25% and get out of there. I want to see it act just like a fair value gap. I barely want to go in. I want to see institutional order flow entry drills. I want to see it poke in and get on out of there. Right? Poke in and get on out of there. I don't want to see it retracing way back up in there. Very good. Very good. We're watching that premium wick, right? We're watching that premium wick because wicks are gaps. Wicks are imbalances. Michael always say wicks are gaps. Wicks are gaps. So that's what we're watching. All right. So then we stay heavy, right? We trade above that previous candle's high, right? We trade above the previous candle high, and then we drop down. Well, first of all, we stay heavy. We trade up into the wick just a little bit and drop down, taking out this sell side here. That is the London low that we were anticipating price to draw into this morning. When we said on this bearish Judas swing that we had got on the 1 minute, we said we want to see price deliver to at least the opening range sell side and preferably the London low, right? And the reason why we were saying that was because we opened up below the afternoon sell side. Yes, we opened up below the afternoon sell side, and then the lunch sell side was at the daily low, right? So not only did we open up below the afternoon sell side, but we stayed heavy, and we was just running through the lunch sell side. So since we're running through all of the sell side, now you turn your attention to this is probably going to be the lowest regular trading hour sell side that we got there, because we've taken out the lunch, right? And then we've come over here, and this is the morning low right there, right? So you got your morning low, your lunch low, and your afternoon low right there. So now if we go to our regular trading hours, right? And here it is here, right? That's your come here. This is your morning low, right? Your regular trading hours. So sell side, regular trading hours, right there. Right. So that's our morning low right there. Okay. So now, so it's not that. Oh, that's 9:15. So that's the 9:30. Okay. All right. So that right there is your morning regular trading hour low right there. So since you we traded, I mean, we opened below the afternoon, ripped through the lunch, right? So now the only other thing we got in the regular trading hours is our morning low, right? Because you got a morning low, a lunch low, and an afternoon low, right? And since we've come down and engaged the London sell side, right? So now we've shown no respect for the afternoon and the lunch low, right? Now we're looking at our Globex low, because what we say, we look at the regular trading hours first. Now we look at the Globex low, right? And we're still showing a sign of heaviness at the London low, right? The only thing we got for regular trading hours is the morning, right? So now you're not looking for price to continue back up because we're just showing heaviness, right? And we said as we was cutting through here, we was looking at this to act as a balanced price range, right? Even though we came back in with this immediate rebalance, only thing we did was trade back above midnight, getting a nice sell above the daily open, right? So we trade back above midnight, right? And then we come down and take out that London low. Now that we've taken out that London low, you see price just slowly makes it, it's spooling now, right? Price is spooling now. There's no stopping. There's no more green candles until we take out that liquidity on this 15-minute time frame. This immediate rebalance is the only green candle, and it's not even a bullish candle. It's actually a bearish candle, right? It's actually a bearish candle because this was a huge green candle at one time, and then it closed in the lower quadrant of the overall range, right? So this is the only green candle during this time, but from 9:30 up until 10:45, 11 o'clock, price was just pretty much spooling down into that regular trading hour sell side. Okay. Right. And I shared a post inside the Discord. I'm not going to share it here publicly because I had money involved in it, showing money inside of it. But to sum it up, the post was about, if you understand like the conditions you in, meaning we're waiting on FOMC, right? We're at all-time highs. Okay. We've just rejected off all-time highs and got a bearish break in market structure, right? We got a bearish break in market structure at all-time highs, and now that we got a bearish break in market structure here, right? We came down, got a bearish break in market structures. We came up there, came back there, and then we dropped down, bearish break in market structure. That's the move, right? And then we come back down and take out those lows there, right? At this point here, right? What sell side liquidity have we taken out to give reason to just go back to that high right there, right? When we came here and took out,
is that internal sell side, Tim?
yes, this would be internal sell side liquidity there. But at this point here, right, now that we traded down and got this bearish break in market structure, right, when we start going back up, right, what have we done over here by taking out any type of sell side that warrants us going back up to them highs up there? Anybody? Anybody? Nobody?
It took out the swing low that sent it up there, right?
Okay. When we came here, we consolidate in there, and then we dropped down there and took out these lows, right? Giving us a bearish break in market structure, because this is when we started going up, right? So we started going up here. Then now that we've come back down and we've got this bearish break in market structure, right? Once we came here and we started going back up there, what have we done coming down that warrants us to go back up to them highs right there?
To go back up,
Yes.
we created a bunch of relative equal highs in liquidity.
It's mine. It's mine.
You talk about these right here.
Yes, you said would warrant us to come all the way back up.
Yeah, I'm saying when we drop down here and get this bearish once we drop here, got this bearish break in market structure right there.
Right.
At this point here, once we traded here, what have we done here that would warrant us to go back up to that high right there?
We took that short-term sell side liquidity.
Okay, so you're saying getting this bearish break in market structure there, that's enough to send us back up there?
I don't think we would go back up there, because once we broke structure, we balanced that area. So I don't know that we would go back up there. I didn't think we would.
Okay.
Oh, you mean after? I'm sorry, Tim. I'm trying to understand what you're saying, because I know once we broke structure, we went back to the breaker and we came down and took that London low all the way down. So now you're saying after we've taken that
No,
London
I said
low?
here, right there. Once we set this low right here
Yeah.
and started going back up, what was done over here that would make you say, okay, we're gonna go back up there now?
Personally, I wouldn't think we were gonna go back up there at
Oh,
that point because we really didn't, um, we took some of that short-term liquidity, but that wasn't, to me, significant because it wasn't like that low that sent us up to that high. I would think we would need to take all of that before we would go back up.
okay, exactly. Nothing has happened to make us go back up there. So when we're watching price, that's exactly what I was looking for. Nothing has happened right here. All thing we did was get a bearish break in market structure. So once we get that bearish break in market structure, right, we're not trying to say we're reversing, right, until we sweep a level of liquidity. Right, we need to sweep a level of liquidity before we start looking for any reason to go back in the other direction. Even if we only come back to these relative equal highs, even if we don't go up here, right, we should not be looking for these relative equal highs if we haven't come down and swept some type of liquidity. Okay, so when we get this break in market structure right there, right, where's your liquidity levels? Right, we know we have, when we traded here, we've traded all through the morning and the lunchtime, I mean the afternoon and the lunchtime for the regular trading hours. Right, where's your next regular trading hour? Here. Right, where's your next liquidity overall? Here. All right, so until you take out at least this, you don't want to be trying to call the bottom. You see what I'm saying? You don't want to be trying to call the bottom. Now, and then once we take out this, right, we're still waiting on FOMC. So we're not trying to call the bottom here because we need to see what FOMC gonna do. All right. So that's why I say when you understand on the post, I was talking about the post, when you understand the conditions you're in, right, you can engage with the alg. We can engage with what IPTA is offering you based off what you see, and then you don't want to overstay your welcome. Because when you, if we understand we're waiting on FOMC announcements, that can bring high volatility. That typically brings high volatility, right? So if you're anticipating high volatility, you're going to be anticipating deep retracements. So if you're anticipating deep retracements, you're not anticipating low resistance liquidity runs into your target, right? So you're not trying to overstay your welcome. Okay, so when you see stuff setting up, you strike, then you get out. You're happy with your low hanging fruit. You're not trying to sit around and wait for it to run. I don't care if it goes there afterwards, because think about it, right? If you got in based off of an immediate rebalance right here, or even based off of trading back into this order block right here, and you was targeting, right, something down here, right? You was targeting something down there, right? Look at what you had to go through because of FOMC. It brought us all the way back up above the midnight open one more time. FOMC rallied back up above the midnight open before dropping down, right? Giving us a bearish Judas swing, boop, boop, right? And then we dropped down, taking it out, traded back up for an immediate rebalance. And then we dropped down again, right? Taking out the sell side one more time before rallying back up, getting a wig snatcher, right? So we dropped down, ratted up, traded back into the range, and then traded back up. Okay, giving us a wig snatcher, right? But if you understand the conditions that you're in, okay, we're in high resistance conditions. We're waiting on FOMC. The morning price action may be a little have deep retracements and overlapping candles, right? So if I engage I want to take base hits, right? I don't want to sit through deep retracements. I just want to take base hits. All right. Lower time frames are going to be your friend to look for quick little scalps. All right. I'm not trying to hit home runs. Okay. What does that look like in price? All right. So looking at our, look at our 9:30 to lunchtime window. Right. So for our 9:30 to lunchtime window, let's just go here. Right. That's our 9:30 to lunchtime window right there. Then that's our 1:30. So our 1:30 to 4 o'clock window right there. Okay. So our 1:30, so our 9:30 to all right. So looking at our 9:30 to 12 window, a lot of back and forth, a lot of overlapping candles, right? A whole lot of back and forth, a whole lot of overlapping candles here inside of the on the 1 minute time frame. All right. So if we notice here at 9:30, what do we say? We engage the pre-market high, right? Then once we engage the pre-market high, we drop down, right? Took out the pre-market low. And we went in, right? We set a low there. We set a low here. Then we ride up, right? Got a change in the state delivery there, along with a fair value gap there, right? And then we continued up until we came back above the midnight price, right? And not only did we trade up into the midnight price, we traded up here into that inversion fair value gap right there. It's going to be bullish fair value gap 1 minute, right? We come here, go to there, right? And if you pay close attention here, right, when we displaced away, took out this buy side, traded up into the anticipatory reactionary point. That's the first imbalance that was created when we went up there and did that, and then came down and got our change in the state of delivery right there. Right. So that's our high probability inversion fair value gap. Right. Once we came down here and set a low, right, we came down, made a low, traded back up, traded down one more time, then popped up, got to change the state of delivery. Can y'all notice where that happened at? Right. Now that we know in hindsight, right? Now that we know in hindsight that 24,389 and a quarter is the lowest point that we went for this morning range. Now that we know that in hindsight, we can go back and look and see where was this low set at. Right? What is this right here? What does that little dotted line represent right there? Anybody? Does anybody know what that little dotted line right there is? Nobody?
Market, pre-market sell side. The pre-market sell side.
Talk about here. Right there.
That's
50% of the
equilibrium.
dealing range.
50%
of the opening range.
Yep. That's equilibrium, right? So this is lunch there. And we come here to right there. I moved my thing by accident. I had to go back and get it right. Right. So that's our lowest low of this range right here. And we go back to that 1 minute candle. Go back to 1 minute candles, right? And that dotted line right there, right? Now in hindsight, we can see that right there is 50%, but the algorithm already knew that, right? And what is this candle right here, right? Going this way and going that way. What is that candle right there? When we're going this way, what is it?
It's a bullish order block and then becomes a breaker.
Yep. It's a bullish order block going this way, and it's a bearish breaker going that way. And where is it created at? And what do we say about
equilibrium?
Yes. And what do we say about those quadrant levels? The algorithm is going to leave PD arrays that it anticipate using in the future. And most of the time it's going to be right there with them quadrant levels, right? Right there with them quadrant levels. And then, right, notice here, who remember the Timonucci's? Who remember them Timonucci's? All right. If we come here and just lob that off right there, right? What is price doing right here? What is price doing right here?
Consolidating.
What was price doing right there?
Same thing.
Consolidating. So if price is consolidating right here, it consolidated there, and we're bearish, right? We can come and say, hey, come from this high right there. We get a Fibonacci tool and we stretch it out and put the 50% right there where price was consolidating at, right? And I can anticipate price going at least that far. That's how we figured out how to use the Timonucci's, because we said, hey, price usually consolidates at 50%. So if I see a spot where price starts consolidate, I can anticipate that's going to be half of the range in the future. So now I can find my implied dealing range by just getting my Timonucci, anchoring it at the high or the low, and stretching it until the 50% is at that area of consolidation. And I can anticipate price coming to at least there. And then if that aligns with something important, like a regular trade in our sell side liquidity, now that right there can be my reasonable target, because based off what the algorithm is doing, we've got a bearish breaking market structure. We're consolidating in this area there, right? So now based off of from this high to that consolidation, that regular trade in our sell side can be my target, because I've already taken that I've opened below the afternoon. I've disrespected the lunchtime, and then now I'm still showing bearish tendencies, right? By making a low right here, making a lower low here, right? I'm still showing bearish tendencies. So now that regular trade in our sell side can be my reasonable target. Why? Because I'm in a new New York session, right? I'm bearish, and that's the liquidity from the New York session that we still have not taken yet, the prior New York session that we still have not taken yet. And based off the signatures that is given me, I can project that price is going to come down to there, right? And then let's go here for a second and see what happens. We come here and get us a projection from there. All right. And then we got us a nice, right? We got a 3.5 that's in close relation to that. And then we got a 4 that's there, right? So we got a 4 standard deviation that's below that, right? So I can shoot for that as a target. My target is 24,402 and a half based off of my structure. And then based off my Timonucci's, right? This right here was my reasonable target. And if y'all notice, where did we end up stopping for this range? Remember, this blue box showed us where the range actually stopped in hindsight. But this 4 standard deviation, where is it? It's the deviation that's below our reasonable sell side liquidity, pre-market sell side, right? That we are drawn towards. We're in a sale program, right? And that deviation is the one that rests below that. And as you see there, that would have been a beautiful target to aim for, because this is where this was the morning low that's just below that. This stuff really freaking works. I'm tired. I said I wasn't even going to be on here long. I done been on here for an hour, right? I'm getting tired of cooking. I'm getting tired of cooking. Somebody better stop me. They're going to ban me from YouTube if I don't stop doing this. I think we had a pretty good session this morning, right? People were saying that, they had some clarification moments today. I feel like we had a pretty good session this evening, right? I ain't saying nothing new, just saying the same thing. But repetition is the mother of skill, right? Repetition is the mother of skill. Tomorrow is Thursday. No tape reading tomorrow. I don't think I have nothing planned for tomorrow, so price action recap should not be a problem. Yeah, tomorrow is Thursday, so yeah, price action recap should not be a problem tomorrow. Do anybody got anything for me before I leave? All right. I don't see nothing in the chat. Oh, wait a minute. All right. I don't see nothing in the chat. Okay, dope. Till the next time I decide to get on Al Gore's internet, share my thoughts on this thing. You made us dig deep today. Thank you. We sprinting. Yeah, Michael supposed to be dropping a video tonight, I think. I know he dropped one last night. We looked at it. I thought it was pretty good. He connected a couple dots in my mind on some stuff that I already watched, but he made it make a little bit more sense to me. I'm gonna go back and watch it again. I didn't get a chance to go back and watch today. We watched it together on the tape reading stream this morning while I was prepping the charts. I didn't even get a chance to prep my charts yesterday. But while I was prepping the charts, we was listening to the video. I'm gonna go back and like really pay attention to it. He shared the notes in his Telegram channel, so I don't have to worry about sitting down and making any notes on it if I want to. He gave us free notes. I think he's supposed to be dropping one tonight, if I'm not mistaken. I'm gonna check to see if he do. If he does, then I'll check it out. Unless I fall asleep, I'm tired. Hey man, y'all be safe on these trading streets, man. That's all I got. Enjoy the rest of y'all day. Gone. Yep.